Natarajan sir, I'm starting. Good evening to all. I welcome you all for the 152nd webinar of the Madras Tax Bar. Today's speaker is Senior Advocate Mr. Ramakrishnan Viraraghavan, who accepted our request readily to take a webinar on one of the landmark decisions of the Supreme Court in the case of safari retreats. Mr. Ramakrishnan, as we all know, is a senior advocate and he is a barrister with the experience of 40 years at the bar. He is also a tenant in 33 Bedford Road Chambers, London, and sits as an arbitrator overseas. He has also authored a book titled The Law of Goods and Service Tax, a comprehensive internet age commentary. These are just a few highlights of his illustrious career. I once again thank Sir for readily accepting our president's request to take this webinar today on the given topic without any hesitations. And I thank you all for joining in today. Uh, Once Sir completes his speech, then we will have the question answer round. I request all the participants, if you have any questions or any queries or any addition to the points to be made, you can kindly put up a message in the chat box. Then we will take up those questions at the end of the speech. And I request all the participants to kindly keep the mic and the video on mute during the speech. So thank you once again, sir, for for taking up this session. And I hand over this session to you, sir. Thank you.
Thank you for your nice introduction, Prithvi. As you were saying, it's a privilege to interact with the third generation of your family. And I have a lot of friends on screen, and it's a privilege to be interacting with you in this today's session. So I've got a PPT, and I'll share the slides and keep talking as we go along. Are you able to see the screen?
Yes, sir.
Okay. Now, this is all about the judgment dated 3rd October of the Supreme Court. I'll divide my speech into three parts. How did this safari retreat arise? And then what does it say? And where does it lead us? Basically, it is the past, the present, and the future. This is how I've divided my talk. Now, safari retreats arose from the judgment, came to the Supreme Court from a judgment of the Orissa High Court Division Bench, and that's reported in 2019-67 GSTR 16, Safari Retreats and the Chief Commissioner CGST. Now, the case arose out of a writ petition filed by the taxpayer. The taxpayer's principal business activity was construction, and he was constructing shopping malls for the purpose of letting out to a number of tenants and lessees. He paid taxes, input taxes under CGST and SGST Acts. He could not avail ITC because of the bar under 17(5)(d). And he filed a writ petition before the Orissa High Court for three reliefs. First, a declaration that 17(5)(d) CGST Act and provisions of SGST do not apply to construction of immovable property intended for letting out on rent. Now, if that was not possible, the alternative prayer was a declaration that the provisions were ultra vires the Constitution. And the third was a consequential mandamus, directing the authorities to grant the benefit of ITC to the petitioner. I think here it will be helpful for you to see the text of the division bench judgment, and that will help you understand how the matter came to the Supreme Court and what the Supreme Court said. I'm sharing the Orissa High Court judgment. Are you able to see it on screen?
No, sir. I think you have to.
No. I'll stop again and share it.
Yes, sir. No, it's clear.
Good. Sit. Yeah. This is the judgment. Safari retreats and another Chief Commissioner, Division Bench of the High Court. Let's go to the relevant page, which is at page 20. Now, these are the facts. The case of the petitioner is that he's carrying on business activity, constructing shopping malls, and numerous tenants. He's had huge quantities of raw material, inputs, etc., on all of which he has paid CGST and state GST. And he wants to let these out. The problem is he was not able to claim input tax credit. At page 23, it says he is not able to claim input tax credit because the authorities are not allowing him. So he said, got this declaration. Now, the very interesting thing is here, the petitioner has been informed that the authorities' view of the aforesaid section 17D, the petitioner cannot avail of input tax credit, and therefore he filed the writ petition. Now, the interesting thing about this is the judgment runs to a lot of pages, but the reasoning is in the last 2 pages, 2 paragraphs alone. So let's come to that. This is the reasoning. We have heard learned counsel for both sides. The very purpose of the act is to make uniform provision for levy of collection of tax, intrastate supply of goods and services, both central and state, to prevent multi-taxation. Therefore, the contention which has been raised, keeping in mind provisions of 16(1)(2), a restriction has been put forward for claiming input tax credit, and the benefit of apportionment is subject to 17(1)(2). While considering the provisions of Section 15D, narrow construction put forward is frustrating the objective of the Act, inasmuch the petitioner has to pay a huge amount without any basis. Further, the petitioner would have paid GST if it disposed of the property after completion certificate is granted. In case the property is filed prior to completion, he would not be required to pay GST. But here he's not using it for his own purpose, letting it out, and he still has to pay a GST to which he's not liable. In view of this matter, in a considered opinion, the provisions of 17(5)D has to be read down, and the narrow restriction by the reading of the provision by the department is not required to be accepted, inasmuch keeping in mind the language used in Eicher Motors. The very purpose of the credit is to give benefit to the assessee. In this view of the matter, the assessee is required to pay GST on the rental income arising out of the investment on which he is paid if he is required to pay ITC, which is required under 17D. In view of the matter, prayer A is granted. That is reading down and saying input tax credit is adjustable, and we are not inclined to hold it ultra-wide. So this is basically the reasoning. And as you would know, the reason, it's very, very short on reasoning. Basically, they have said, look, we read down the provision because the assessee can't be allowed to pay taxes, and the framework of GST is to prevent cascading. Therefore, we are not permitting disallowance of ITC. Now, for a moment, to complete this, let's take a look at Eicher Motors Limited and how Eicher Motors Limited Supreme Court judgment will apply to the facts of this case. Are you able to see it now?
So you'll have to reshare it.
Okay. No.
No. Yes, sir. Can you just zoom in, sir?
Yes. This again, 3-judge bench of the Supreme Court, 1999 to SCC 361. I'll go to the 4th page. The reasoning which the division bench relied on is at the last page, paragraph 6. We may look at this matter from another angle. If on the inputs, the assessee had already paid taxes on the basis when the goods are utilized in the manufacture of further products as input, then the tax on these goods get adjusted which are finished subsequently. Thus, a right accrued to the assessee on the date when they paid the tax on the raw materials or the input, and the right would continue until the facility becomes available, thereto gets worked out, or until the goods existed. Therefore, it becomes clear that 37 does not enable the authorities to make a rule which is impugned therein, and we may have no hesitation to say that the rule cannot be applied to goods manufactured prior to so and so, on which duty had been paid and credit facility availed thereto for the purpose of manufacture. The ratio of this decision was, this is an issue of MODVAT and a challenge of a rule under MODVAT. The rule could not be retrospectively applied to deny taxation relief, input tax credit relief on goods already manufactured and in existence at the time of the rule coming into force. So if you look at the ratio of the Supreme Court decision, that has really nothing to do with the challenge in safari retreats before the High Court, for 3 reasons. Number 1, safari retreat was a challenge to the constitutional validity of the plenary registration, whereas this was to the to the rules. Second, the challenge in this particular case, Isha's case, is the retrospectivity of the rules. And third, there was a right accrued in favor of the assessee, and that could not be taken away by the retrospective rules, application of the rules. So these are the 3 differences in Isha Motors which are not available in safari retreats before the High Court. So the very basis on which the High Court allowed the writ petition was on a difficult foundation. As you saw, the reasoning of the High Court is Isha Motors observations apply. That reasoning is wrong because we have seen Isha Motors is on a totally different basis. The second reasoning is it's frustrating to the assessee to pay tax and not claim ITC. That is hardly a reason. Frustration of the if that's a reason for invalidating or reading down a provision, I think entire Income Tax Act can be read down to 2 sections. So that's not the basis. I had written in my commentary on this that the High Court decision requires reconsideration, and that is how the matter came to the Supreme. I'll go back to the PPT now.
It's seen, sir.
Pardon?
I can see it, sir.
Good. So the reasoning of the High Court, which we saw, narrow construction frustrates the very object of CGST Act. Now, provision must be read down keeping in mind the purpose of ITC, which is a benefit given to the assessee. And Isha Motors, paragraph 6 applies. To a certain extent, in point number 1 and point number 2, the High Court is correct, because the very purpose of CGST and GST laws in general was to prevent the avalanche of increase in taxes. So they wanted to, ITC was a basic fabric of GST laws because they did not want the taxes to be compounded. The compounding effect of taxes were to be avoided. So the narrow construction frustrates the object of GST, because one thing we must remember as tax practitioners, both direct, indirect taxes, these are economic legislation. You can legislate away social behavior, but you can't legislate away economic behavior, because if you are talking of reducing, denying ITC, then the prices will increase. If you want to maintain the prices, you must have the pass-through effect of taxes. You can't say I will keep the cascading effects, I will try to negate, or I will retain the cascading effect, but I will not permit ITC. No, it doesn't work that way. You must either have a cascading effect and you have increased prices, or have no cascading effect, but maintain the prices passing through of taxes. So to that extent, A and B points of the High Court was good in economic and social philosophy, but not very good law. So let's go to the Supreme Court and how the litigation originated from the High Court to the Supreme Court. The matter came before the Supreme Court at the instance of the Chief Commissioner of CGST. He appealed against the High Court's order. Leave was granted, and these were civil appeals. Safari retreats was a lead matter before the Supreme Court. As it happens in the Supreme Court, once a lead matter is admitted and leave is granted, you have Article 32 writ petitions filed directly, and then you have intervening petitions filed before the Supreme Court. So, in addition to the civil appeal, writ petitions were filed directly to the Supreme Court, challenging the validity of Section 17(5) clauses C, D, and or reading down of the aforesaid clauses, as well as reading down of 16(4). This is how the matter came up for a final hearing before the Supreme Court. Let's start with the highlights of the Supreme Court's verdict. The first observation is it's a verdict of a two-judge bench. Now, two-judge and three-judge benches does not make a difference up to the High Court tribunal level. You have to accept and follow the judgment, however it is. But at the Supreme Court level, it is easier to persuade another two-judge bench to refer this verdict to a three-judge bench. You just have to persuade them there's a doubt, something is wrongly decided, requires reconsideration, then almost immediately you get it referred to a three-judge bench. So what I'm saying is Safari Retreats two-judge bench is not as stable as the verdict of a three-judge bench. It can be questioned again in the next future, not in the remote future, in the immediate future also, both at the instance of the taxpayer and at the instance of the department. So that's the first point we need to keep in mind. It's easier to refer a two-judge bench to a three-judge bench. It's far more difficult to refer a three-judge bench to a constitution bench. That's the first point. The second point is constitutionality of 17(5)(c)(d) and 16(4) have been upheld. Similarly, corresponding provisions of state GST acts have been upheld. We can't go there anymore challenging the constitutional validity. That's the end of it. But apart from constitutional validity, the verdict is not the end of the road. I was talking to Mr. Pramod Chopra, senior advocate, and he was saying, what is it, a victory or is it a defeat? And as he rightly said, this is neither a victory nor a defeat. It's just a few potholes were removed, taxpayer is happy, a couple of speed bumps added, revenue is happy, and the journey goes on. And it's good for the lawyers. For the others, there's still that uncertainty which has gone on to a slightly different level, not removed. Now, the first thing we need to see is the verdict on the nature of ITC and the entitlement to ITC. ITC under the GST laws is not a fundamental right. It never was. How can it be a fundamental right? It is a statutory right subject to statutory conditions. That's the first point to take. And the other point is it's not an exemption or concession. Now, this is very important because there are some High Court judgments on ITC saying it is an exemption or a concession and it must be very strictly construed. It can't be, it's a gift by the government. Those kinds of interpretation are not acceptable under GST laws because as the Orissa High Court had said, and which is that part of it was not negated by the Supreme Court, one of the main objects of the GST legislation is to prevent cascading of taxes. In fact, the statement of objects and reasons, notes on clauses in the bill, CGST bill says there's a cascading of taxes as taxes are levied are not available to set off against other taxes. And that is the reason why all the taxes were subsumed. And since they were subsumed into a single tax, there is this right of set off. And the right of set off is nothing other than ITC. So ITC is a part of the framework of the GST legislation. It is not an exemption. It is not a concession. That is very important. Now, ITC is not a fundamental right, and that is why the challenge under 19(1)(g) failed before the Supreme Court. When can ITC become a fundamental right is when the taxation rates are so high that without ITC, it is not, a person is not able to carry on business. If it comes to that level, I cannot carry on business without ITC because the tax rates are so high. Only at that point of time will it become a fundamental right. And even that is not so much on ITC, but it is on the rate of taxes. So let's jump into the Supreme Court judgment to see what the Supreme Court has to say on this ITC.
So it's not seen, sir.
No, I'm trying it the second time, still not there.
Yes, sir.
So let's go to page 41.
So if you can zoom in a little bit more.
Yes. Let's look at section 16, which is extracted by the Supreme Court at paragraph 27. Are you able to see it? Should I zoom in further?
Yes, sir.
Now better?
Yes, sir. Better.
Yeah. Eligibility, 16 talks of eligibility and conditions for taking ITC. Every registered person shall, subject to such conditions and restrictions as may be prescribed. So this is the first thing, subject to such conditions and restrictions as may be prescribed. These are conditions and restrictions on the entitlement to GST, ITC. The second thing is the ITC must be availed in the manner specified in the section. Now, prescribed has been defined as under 282, 87, I think, as prescribed under the rules. So the entitlement of GST is subject to A, conditions, and B, restrictions. So there are conditions precedent and there are restrictions which are subsequent. Both these things are prescribed by the rules. When 16 provides for prescribing by the rules, you cannot defend the prescription by the section itself. So 17(5) cannot be read down or cannot be ultra vires because it contravenes 16. That is the first point to be made. Entitlement to GST is a statutory right. It is not a fundamental right. And it is according to the law as prescribed, both by the subordinate legislation and by the plenary legislation. So this is what the Supreme Court says. at page 41. From the subsection is apparent only a registered person can avail, and a registered person, the CGST. Availability is subject to conditions and restrictions as may be prescribed. Prescribed is defined to mean prescribed under the rules made under the CGST Act. So restriction is subject to conditions and entitlement. And it has to be availed in the manner by 14. Then the Supreme Court goes on to, one second. Supreme Court goes on to the validity of 17.5 and the non-ostensive clause on 17.5. That's at page 46. Seventeen deals with apportionment of credit. The provisions regarding block credit in 17.5, subsection 5 and 6. So the first thing is the non-ostensive clause. Notwithstanding anything contained in subsection 1 of 16 and 18.1. So the Supreme Court has done no magnificent statutory interpretation. This was not like Keshwananda Bharati and reading in between the lines. The Supreme Court basically said the section is valid, subsections valid, clauses are valid. And it simply read the section. And while reading on a plain reading of the section, it says, non-ostente, notwithstanding anything contained in 16.1 and 18.1 means 17.5 will override both 16.1 and 18.1. Now, if you take a look at these two sections, 16.1 talks of eligibility to take this input tax credit, and that is subject to conditions and restrictions, and 5 is one more restriction and condition attached to 16.1. Similarly, 18.1 talks of subject to the restrictions as may be prescribed and availability of credit in certain circumstances. This again is overridden by 5. So whatever is provided in 17.5 will willy-nilly override the benefits given by 16 and 18.1. Now, the other subsections of 16 and 18 are not overridden, and they need not be overridden because those sections do not have restrictions or do not give benefits. They have restrictions only. Now we'll go on to clauses C and D. Both these C and D are in different framework. Let's go to C first. I'll take the PowerPoint. Are you able to see the PowerPoint?
Yes, sir.
Now I've broken down 17.5C for easier understanding. Works contract services. When first thing is it must be supplied for construction of immovable property other than plant and machinery, except where it is input service for further supplies. So basically works contract on services, input tax on works contract services supplied for the construction of an immovable property is ruled out. Available for plant and machinery. Also available where it's input services for further supply of works. So these are the 3 qualifications. This leads to 2 questions. What is immovable property and what is plant and machinery? The construction given by the revenue on this particular provision is when supplied for a construction of an immovable property means, go back to the definition of immovable property. Immovable property has been defined in the CGST definition section, and it says basically goods other than movable property, and whatever is immobile property is something other than goods. So we go basically back to the definition of Transfer of Property Act. Whatever is earth or things permanently attached to are fastened with the earth becomes immobile property. So the revenue says, look at the definition of immobile property, and whenever anything relates to construction of an immobile property, then no input tax credit is given. And what is plant and machinery? Plant and machinery has been defined in the explanation to the section, and that definition will govern all the words plant and machinery everywhere in this particular part. So this was a simple argument of the revenue, where they said immobile property. So take Safari case. Safari's case was the input tax credit was expended on incurred on building a mall, a shopping mall. So the revenue said, look, is a shopping mall a movable property? No, it is not a movable property. Since it's an immobile property, then every kind of input tax credit relating to the immobile property gets out of ITC. So plant and machinery is completely different. You can't say a building is plant and machinery. This was the revenues case. Now the Supreme Court went on to very creatively deal with immobile property. Now the Supreme Court said immovable property, don't go by the definition under the Transfer of Property Act, but look at the chargeability of property. So when you look at the chargeability and then go by sections and the schedules, this is what the Supreme Court said. I'll take you to the Supreme Court. At page number 56.
His work ethic is beyond belief. He's written a book on GST. He's now speaking on an important judgment.
Request Mr. Sivakumar to kindly mute.
GST.
No, are you able to see this on the screen?
No, sir. You have to reach it. Yes. Now it is.
Got it? Okay. Now at paragraph 39, page number 53. The Supreme Court went into the definition of the scope of supply, and the Supreme Court said, look, if you look at all forms of supply, don't stop there, but go on to activities made under Schedule 1, Schedule 2, and Schedule 3. And when they go to Schedule 1 and Schedule 2, we find that land and building, leased, etc. are services. And these are supply of services, and renting of immobile property, construction, they have said, they have defined supply of services, construction of a complex so and so, except where the entire construction. So what the Supreme Court did was they adopted this definition, incorporated it into Section 7. So Section 7 plus the schedule, both of them were transposed into the definition of immobile property under 17.5.
Sir, I'm sorry. Request the host to kindly mute Mr. Sivakumar.
But if there is any question on what I'm saying, I can even take it
I
right
think
now.
the mic is just turned on, sir. I think that.
Okay. So this is what the Supreme Court says. If there is a complex building so-and-so intended for sale, wholly, partly construction becomes supply only if the construction is saved by whichever is. Thus, if the construction amount is paid before or after, then that makes a difference. If it's paid after construction completion, it's sale of immobile property. If it's paid before, it's services. If it is paid before, then you can avail in ITC. And if it's lease or tenancy, then also you can avail ITC, because lease and tenancy, license, all of them are services. So basically, the Supreme Court said you can avail ITC under 17(5)(c) if you're able to demonstrate that the purpose for which you are building is leviable, it's not immovable property, and it's leviable to further GST. So that is a major victory for the SSC because the definition of immovable property has been tweaked to include lease, etc. And this is their conclusion. They have said basic philosophy is that whatever is ITC here and it is leviable to further GST, then of course this is available, ITC is available. Then the second thing they said was on plant and machinery. They go into the definition of plant and machinery under the explanation, and the words used are plant and machinery. In that explanation, they have said plant. I will read the explanation now. Said plant and machinery, apparatus, etc., and then foundation equipment that are used for making outward supply of goods, and both includes foundation and structural supports. Machinery fixed to earth by foundation or structural. And then here in clause number C, they said immovable property within brackets other than plant and machinery. So the Supreme Court said, look, if you're saying immovable property other than plant and machinery, it means some of the plant and machinery may also be immovable property. So you can't say the moment it's immovable property, there's no ITC. You have to go further and say whether it's immovable property in the sense that there is no further ITC, or is it services? And then you can have it. So the thing here now is when you come to see works contract services when supplied for a construction of an immovable property. So there under immovable property, you go into schedule and see if it's completed before, whether the occupancy certificate is given or whether it's lease and license, in which case this will not arise at all, it is for services. So that's the first thing on works contract, which is in favor of the SSC. Then we go on to clause number C, from C to D. Goods or services both received by a taxable person for construction of an immovable property. Again, the same reasoning on immovable property as the clause C applies to clause D. And then there's the other one, on his own account, including when the goods are used in the course of further business. So here, the additional question which arises is what is the meaning of one's own account? The Supreme Court answered this question by saying one's own account will be an account where there is no further services given for his own residential purpose. That is within there. I'll go to page number 49. Construction cannot be said to be on a taxable person's own account if it's intended to be sold or given on lease or license. And they further elaborated it by saying the second exception, there are two exceptions to D. First exception is received consisting of plant or machinery. And second, construct an immovable property constructing plant and machinery. Second is goods and services for construction of not made on his own account. Construction is said to be on a taxable person's own account when it is made for his personal use, not for service, used by the person constructing as a setting in which the business is carried out. It cannot be used for its own account if it's for lease license intended to be sold. So this is another broad pothole removed by the Supreme Court under Section 17D. 17C, as you saw, made inroads into immovable property. 17D, immovable property, the same thing there, and on one's account, one's own account also has been in favor of the SSC. Now, the third under 17C is the words used in the 17C is not plant and machinery, it says plant or machinery. Now, if you look at this chapter and the section, you will find the words plant and machinery used about 10 times. But the words plant or machinery has been used only once. So the government said that's a mistake, an error, and the Supreme Court can always correct the error in the legislation and read it along. The Supreme Court said, no, it's not an error. Plant or machinery is different from plant and machinery, and the normal meaning of the word plant or machinery must apply here, and you cannot apply the definition given in the explanation. Now, here the SSC relied on the judgments of under the Income Tax Act. These are the classic judgments. See, this is what the Supreme Court said. Enacting consciously chosen to use plant or machinery. And that means something different. The SSC relied on Taj Mahal hotels under the Income Tax Act, where the sanitary pipes and fittings were held to be plant. Then the other decision which was relied on was the decision in Anand Theatres. Anand Theatres, where the question was whether a cinema theatre was a plant. Now, in both these cases, the issue was Taj Mahal, the issue was not whether the building is a plant. In Anand Theatres, the issue was whether the building was a plant. Both cases, the Supreme Court said Taj Mahal sanitary fittings alone. And in Anand Theatres, it was distinguished by saying, look, even in Taj Mahal hotels, the issue was not whether the building was a plant. And in the context of the Income Tax Act, cinema theatre can never be a plant because there are separate provisions for building. And at page number 67, they said hotel cannot be the building. In the result, it is held that the building used for running of a hotel or carrying on cinema business cannot be held the plant because the scheme of 32 clearly envisages separate depreciation for building, plant, etc. I would like you to make a note of the scheme of 32. It is my submission that now let's go to the Supreme Court. The Supreme Court then talked of a third decision, which was the decision of Victory Aqua Farms. That's at page 70. Victory Aqua Farms, the citation is not given here. I'll give you the citation. The citation is Victory Aqua Farms 2016, volume 16 SCC 553, two-judge bench. And this two-judge bench, Justice Sikri authoring, followed Karnataka Power Corporation. The citation there is 2002, 9 SCC 571, three-judge bench. And in a three-judge bench, the issue was whether a power station building was a plant. And they held, yes, it was a plant, and they distinguished Taj Mahal Hotel. And this is what they said. They said it cannot be held so broadly. And they say to differentiate a building and plant, additional so and so, other factors must also be taken into account. Noticing this difference, the Supreme Court in Safari Retreat said, the distinction and cannot be, while considering the question whether a mall or a warehouse or a building other than a hotel or cinema can be said to be a plant. So ultimately, the Supreme Court said, we cannot decide this now. This is the question of a functionality test. The functionality test is very simple. The test is, are you carrying on the business in the building as a setting? Or is the building itself a part of your business apparatus? That is the function. If you're carrying on a business as a business setting, you can carry on anywhere and you have this plush office there. That's a building, it's not a plant. But if you're carrying on this particular business using the entire building as an apparatus, like a power station, for instance, or maybe a pond, a swimming pool for your aqua farm. All this is an apparatus for your building, for your business. And this is the difference. And they said, look, if it's found on facts that the building has been planned to save special technique, it will qualify as a plant for the purpose of investment allowance. The word plant used in the bracket cannot be restricted, meaning provided difference. So this is the third loophole that the Supreme Court has given. And the Supreme Court said, look, we cannot decide, and all this has to go back to the factual authorities to find out whether this is a plant or building, which is as per the facts of each case, and we cannot decide this. So that is why I told you this was not the end of the road. So what do we learn from this? Where do we go on from this judgment? That's something we need to discuss.
It is seen, sir.
So going forward, first is anything other than hotel building or cinema theaters is good for argument. Main thing is you must document everything. First, plant or machinery, while you're giving the work order for the building or everywhere in every document, you must say two things. First thing is you must say it is for further letting or further sale, so it is not on your own account. The second thing the taxpayer has to say is you must give all the specification, technical details, every possible document to show that it is a highly specialized building, like a mall, for instance, where you're actually carrying on your business using that building, and it's not a mere setting in which your business is carried on. So documentation is vital in every one of these cases. And similarly, when you're taking money, make sure it's before, if you're going to sell, before it ceases to be a movable property, that is before the construction certificate, those things. Documentation is vital. Then the other thing is income tax. Decisions under the income tax and hotels and cinemas. So the Supreme Court here has said buildings other than hotels and cinema halls. Now that is an arbiter, because the Supreme Court was not considering hotels and cinema halls. And the judgments of the earlier Supreme Court in Income Tax Act is of a completely different scheme. So all that I'm saying is hotels and cinema halls can be tested again before the Supreme Court, saying that the earlier judgment in Taj Mahal and Anand theaters are distinguishable. The scheme of the Income Tax Act and the scheme of CGST, GST laws are completely different. That can be tested, but that can be tested only to the level of the Supreme Court. So in all, I think this is a positive decision. It's both sweet and sour, but I think it has got a lot more sweetness than saltiness or sourness. So with that, I come to an end of this. I'm open to questions if you have it.
Thank you very much, sir. Indeed, it was a really well explained speech on the entire judgment. But sometimes too much sweet is also not good. So adding a little bit of salt also makes it more tastier.
That's true.
Yes, sir.
That is true. It can't even be 50-50, but this judgment is, I think, 80-20 at most.
So that's true. So if anyone has any questions, you can kindly come forward. Maithili ma'am is here, our secretary.
Yes.
I read her questions even before she asked. Tell me.
No, it was really, I think it was a wonderful presentation, and that's unquestionable.
Thank
And
you. Yeah.
and I must say, the analysis is very useful even for the service tax regime. Where they brought in the exclusion, whether it was for works contract or for outdoor catering and all of that, everything was subject to a caveat. So that uh, actually that needed a lot. There is this Ganeshan builders, and there are a whole lot of judgments where you
Right.
go into these questions. This is the kind of analysis that we needed, and
Of
which is
course.
something which can be pressed into service even today for the pending litigation. So I think this judgment is very useful because we don't have that kind of in-depth analysis readily available. It's like an open and shut, yes, no, and that's it. But there's a lot more to it than that. But this needs to
Yes.
be applied and examined by the courts.
Yes.
So it is a wonderful presentation, and definitely it'll, thought-provoking one. And I'm sure everyone's got their ideas from your presentation itself. And also a 91-page judgment, which you've presented it in such a short time, and the easy flow is really fantastic.
Thank you, Maitli. That means a lot to me. Thank you.
Thank you, ma'am. Anyone else who wants to, who has any query or who wants to add on to whatever was spoken? The floor is all open, so you can kindly come forward. I think
Vijay, you have started with the High Court judgment. That was the best part of it. To understand how it has come to Supreme Court and the way in which it is brought to Supreme Court, and how High Court has simply sorted down and said the benefit interest of the High Court was to see that how the benefit can be extended, which Supreme Court restricted where it is not possible. And the way in which you put forth, as Maitri explained, was wonderful. It's very clear, and you can know how you can advise without even reading the judgment. You know where it has come to this. It was really
That's right.
wonderful presentation. The way in which you put forth, and no addition, and it was from the judgment you quoted the relevant portion. That was really wonderful. In fact, I must personally thank you also. When we met at Delhi and I requested you, you agreed for it, and I straight away invited you. So nice of you also. And in such a short time you presented it.
So kind of you. Thank you.
No kind side. We must be good. That whole MTB must be thankful to you that you have joined and presented such a.
Thank you. I request Natarajan sir is here, so I request him to just.
Could I just add one small thing
Sure,
for this? See, the Supreme Court has also given an entire page on interpretation of CGST laws. That is very useful. But there is one point that they have gone a little beyond. If you look at the pages where the Supreme Court has explained, they have said these principles are settled. When they say principles are settled, they have not referred to any earlier decision, just saying that they are settled. So we don't know from where the Supreme Court has got these decisions. And one particular paragraph is disturbing, where the Supreme Court says, I'll just read that paragraph, where the Supreme Court says, if a literal interpretation is manifestly unjust, if the letter of the law fails to catch him, then only in that case, the court can modify the language. That's a disaster for taxation. If the literal interpretation is manifestly unjust, which produces a result not intended by the legislature, only in such case can the court modify the language. this may open the doors for both the assessee and the government saying there is manifest injustice. So ignore the language. That's the danger this judgment has brought in. And said, this is the part which is a little salty, not sweet.
Yes.
I'm so sorry. I just thought I'll add it. I first
No,
thought
no,
I'd
no,
finish it.
definitely,
There's
sir.
no time left, but I thought now we have a little momentum. And this is at page number 32 and 33 of the judgment, paragraph 25. Yeah, I'm sorry.
Thank you, sir. Natarajan sir wanted to add on something.
Yes, he was there on the screen when I
Yes,
started with this. I should apologize.
No, no, no.
Thank you, sir. Thank you for taking out your time and discussing among us. And this judgment was one of the most expected judgment. People were eagerly waiting for this particular judgment.
Yes.
And even before the judgment was out, there were a lot of interpretations, a lot of views being expressed in all social media. I don't know from where they got the judgment. So many interpretations were going on.
Right.
In fact, all of us in MTB, we just wanted to wait for some time. Let all these things die down. All this euphoria, everything, let it die down so that we will have a real analysis without bothered by either this way or that way. So if you ask me on this particular judgment, it could have been more authoritative, either this way or that way. On the one hand, they could have said, allowing credit or not allowing credit is a policy decision, we will not interfere. One extreme. Other extreme, they could have gone, so long as the asset is going to generate an income on which GST is payable, there is no reason why credit should not be given, it should be given. So now it is neither here nor that way. Somewhere in between, they left it open. I think nowadays the board has come out with a novel idea of issuing circulars as is varies. So many circulars saying as is varies. And now they have issued another circular explaining what is as is varies. So this judgment has also left the issue as is varies. And again, whether in a particular facts and circumstances, whether a particular building can be considered as a plant or not, it is left open. So another round will start in each and every case, whether this building can be considered as a plant or not. And why not? A cinema hall in all sense, it can be considered as a plant. The entire furniture setting and the screen, the operator room, it can, just because in another decision, in another context, it was held not as a plant. Why we should follow the same logic? It could have been done.
And now cinema halls are built inside malls. You no longer have any. So
Yes.
added advantage.
Yes. So it could have been much more either this way or that way. Anyway, if everything was settled by the Supreme Court, we will not be having another session on it. So let all the issues be re-agitated once again from the beginning. And for that, you have set a clear setting. So by taking us through the High Court judgment and how it has moved to the Supreme Court and the relevant pages and relevant extracts, now the setting is clear. So now it is for all of us to jump into the judgment and read it and form our own views and guide the taxpayers accordingly. And once again, on behalf of all our members, we thank you for your time, sir, and we really enjoyed the session. Thank you, sir.
Thank you for that.
Thank you so much, Natarajan sir. So
Only
thank
one
you.
word. I think Natarajan said that it is settling not only for webinar, it's for lawyer's paradise, because of the judgment will give interpretation. You know, every fancy interpretation can come and give one way or other. Therefore, this judgment has thrown more benefit to the MTB and lawyer in general and MTB in particular, being a tax practice.
So thank you very much, sir. Once
If
again.
APS is there, APS can come.
Pardon?
APS, are you
Mr.
here?
Wall, he was
I
there.
am here only, sir.
Yes,
Sir,
sir.
please come.
Sir,
I
Mr.
am here only, sir.
He is Ramakrishnan, you may know. You are.
There are some mic
Yes.
issues here. I think it may echo, so that's why I said it's a very good presentation, sir.
Thank you.
As Mr. Chopra said, you started with the facts, so therefore anyone can easily understand, and also given various analysis of the judgments and your own interpretation what should have been done. And as correctly said, now the judgment is in assessware condition only, so you have to see what it is going to develop further complications, and of course the circulars to be issued by the board, we have to see, and we can hope for the best. Yes, sir. Thank you, sir.
Pleasure.
Thank you very much, sir. Once again, thank you all for joining also today. So, sir, this session we will upload it in a couple of days' time in our YouTube channel also, sir. We will circulate whoever was not able to attend the session today, they can obviously see it on YouTube as well. So, thank you once again, everyone. Thank you for joining here. And thank you, sir, for taking out time for giving such a wonderful
Been a pleasure.
speech, sir. Thank you.
Thank you, Ramkishan. Thank you very much.
Pleasure.
Thank you very
Been a
much.
pleasure.